All right. How y'all doing today? Hope you had a good trading day. We actually caught a few good numbers today. All right. So what I want to talk about in this video is the supply and demand zone. This is a video that should have been I should have made a long time ago, but I'm glad we're making it now. So there's a difference between support and resistance. Because like I said, you can come here on the chart and you can clearly see support and resistance by the sharp moves. If you've seen my videos by now, you'll see um, all sharp moves. That's support and resistance, and obviously price blew right past it. We have one right there. Price blew right past that one too. We have one right there where price blew right past too, because these are daily support resistant areas, or probably weekly. So I'm just giving you illustrations of support and resistance, right? So yeah, you could go on the chart and do it yourself. So support and resistance is both sharp moves that's acting as both support and resistance on each side. So this sharp move, like right here, for an example, that sharp point right here, that sharp point illustrated very good resistance, even though it blew right past. But in essence, we have three sharp moves right here that act as a floor. A sharp move right here that act as a ceiling, and then you slide it on by. You got this move right here as a sharp move, and then you have this move, but never closed. It came down. So think, though, as an advanced trader, you got to understand those moves right there. So that's support and resistance. How it's going to look in a nutshell when you're looking at it on a line chart, and you can see knowing this, you can really kick binaries, but also. But right now, we're not talking about support and resistance, which, I mean, it is a support and resistance. Don't get it twisted. We're dealing with the supply zone of the market and the demand zone of the market. So I don't want to get too advanced. All the supply zone and demand zone is the structural highs and the structural low of the whole market. And I'm on the daily here. So right here is the structural low of this market. Up here is the structural high of this market. The reason why this is very important, because when it comes right here, there's only two things that the market's going to do. As you can see, the buyers are going to get in and push that market away from these areas because they're order blocks. Order blocks have, let's just say that this wasn't the DAX index, this was GBP USD. So GBP USD dropped down right here, hypothetically, and it came to this demand zone, right? Put that in. So this is the demand zone, right? And I'm gonna put the supply zone up here. This all bank talk too, by the way, but it's good to know for a trader. Every time price gets to the structural low, and if this was GU, that means GBP would have pushed, that would have had buy orders right here. You see that last wick, liquidity grab, or whatever you want to call it. That was the last wick that'll let you know that the market was going to push back up. And as a trader, when you see things like this, these wicks on these demand zones, you got to think of it. There was a liquidity grab. It got a lot of traders out of this trade. Now it's ready to push back up to this supply zone. This used to be a supply zone too. So we got two supply zones. We have a new supply zone, a structural high, and here the old structural high. So we got two supply zones here. So what can happen in this scenario is this. Price can come up here, you know, get stuck up here, wick up real good, then wick down. Because look at the wicks down here. And then it can start plummeting back down from this area. Or it could just come back up here and touch this supply zone, then come down. Or it could just break it and make a new high. And when it makes a new high, it creates a new supply zone. But if this is the move that could possibly happen, and then from here, you know, it'll come and probably shoot back up to make the high. Because it's just these supply zones are where all the banks put in their orders at. When they got orders in these markets, these orders have to be filled. I know you heard of order filling before. So let's show another example. I'll just pick a random one. EuroCAD. Okay, let's go to the weekly. Let's look at the structure. Let's go to the monthly. Because they show them well on the monthly. I mean, look at them. It's like it's really obvious. So let's find the supply and demand on the monthly. Obviously up here was the last structural high from that move. Then the market crashed. Then we have the demand area right here. So that's the supply, that's the demand. Now we have what we're having here is on, because every time frame has its own supply and demand area. So on the monthly, this is really what you guys would call monthly resistance, monthly support. But see, on these monthly support and resistance are big orders that need to be filled. When they get filled, these wicks happen and then it pushes the market up. So let's go to the weekly. And from the data that we have right now, that we have the weekly demand, right? Let's make it another color. We got the weekly demand, a supply right here. And then we had a weekly demand right here. And remember the market, so Euro and Canada have order, like blocks of orders right here. And when it touches it, it activates. It's kind of like having a buy stop or sell stop or something like that. But we're not dealing with a bank that's got a MetaTrader on their phone. Hell no. We're dealing with them that have algorithms that have these blocks in here. And price action shows it. Wick, 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 keep activating. Then it come back here, activate a little bit more and drop. So we come to the daily. You see they're everywhere on the daily. So the daily from what we have right here, because it's always got to do with price action where it's at now. So we do have an area right here, as you can see, and it dropped. And right now we're at a daily supply. We had a beautiful W off the daily supply. We might have a retest, something to this extent. We get the retest, and then, you know, it could come back up to touch these the supply zone again. I mean, of course, it has to go past all the support and resistances and things of that sort, but you get the point where I'm trying to come from here, hopefully. So 1 second to make sure that everyone is tuned on there. Okay. All right, cool. So that is how you come to the market and find these demands. Like gold has them really well. Let's make it. So obviously, if this is the monthly for gold, this used to be a supply zone, but this supply zone got taken out. So we possibly could have it just filling up these orders and have a big drop of gold. Because like I said, it likes to come and fill these orders in until after a while it'll just get away. Because I mean, look at all these orders that got filled. That like I don't think that these orders got filled enough for it to make this push on the side of gold, not on the dollar side, but gold actually filling orders to continue it in an uptrend. But now we got this demand right here, and we're having a little bit of a little battle here. Because I mean, you could clearly see, and we got a little base and a little floor on this supply, and we're either gonna get like, I mean, when you trap the market up, and then you know where you know that this is a supply zone, so it filled up a lot of orders. It could possibly just break out of here and just drop and floor because it's got enough liquidity to do it now because it's been sitting here. Or maybe, maybe there's liquidity on the other side of the dollar, not gold, where it breaks up to the upside. That's what these order blocks are here. It's a fight at these order blocks of where the direction of the market is going to go at. And it's based off algorithms, but anything can happen at this point. That's why, I say it's really, I feel like it's very important to understand structural high, structural low. On those structural highs and on them structural lows are orders that needs to be filled. And when they fill them, they violently go the other way. This order got filled, it violently came down to this one. It created this one right here. Then orders got filled, it came back. Orders are getting filled as we speak now on the monthly. So it's either going to make that move or that move, depending on if the orders filled for the dollar to be, the dollar to win on this order block, boom, back down to here. Or if the gold prices, orders fills are too strong and the bulls win, then we're going to continue to the upside. So, that's just a overview. We'll get more advanced as time goes on, but it's just giving you an overview of what happens when it gets to these structural highs and structural lows and what us as traders can be looking for. And obviously, before I conclude the video, you can always, it's always good to go to the 15-minute and look at the 15-minute and what we got on gold here. So gold is right at the 15-minute. Put this in. Gold is at the 15-minute. This is the 15-minute supply. While we have a demand down here, even though I remember this wick down. This wick down was for something else. There was something happened in London session. I forgot what it was, but supply and demand. So eventually orders will be filled for it to break out of one of these directions. And that's all it is. Just understanding what you're looking at. That's all, as far as market structures goes. So that's the video. Hopefully you learned a little bit about, what you're looking for. And what's going on, Jay? I'm over here recording. When did you get in? All right, so you understand what I'm talking about when it comes to structural highs and structural lows? You're gonna have this on the website. Not fully yet, so I'm gonna go over it one more time. It's really simple. So, I like going to the higher time frame. So, let's see. Let's do it in one I ain't do yet. I want to be. That looks ugly. That looks hideous. Even though I can do one. Okay. All right. This one looks like a good one. So basically what I was saying is this. The market has the structural high, which this is the structural high right here is for what we see. And the market has a structure low, the structure of the market. And it's on every time frame. This is just the monthly. What these areas are called is, so this one at the top is called the supply zone. It's still resistance, but I spelled it wrong and everything. All right, spelling it wrong. All right, supply. So that's the supply zone. That's demand. And I think, I don't think it matters. You could reverse them or whatever. Um, it's nice and simple. When price comes to this supply zone, and this is the British pound versus the Japanese yen. When Great Britain pushes it up to this supply zone, what happens here, not only is this support, not only is this resistance, but we have order blocks here. Like I said, the bank does not have MetaTrader 4. They have something different. They deal with algorithms and stuff. But what comes here, both orders are filled in for GBP and yen, and there's a fight up here. And sometimes them fights lead to wicks like that candle wick right there. Or, when you see these over exaggerated wicks, that's them fighting at these order blocks to see who's gonna violently push the market back the other way. So now here we are at GBP JPY, and see we had on this order block, we had a nice wick away from it because Great British Pound won the fight here. Then we have a W right here, and it pushes back up. And it's not coming down, but see, the scenario is this at the structural low. As a trader, you want to, when it ever it comes back down here, you got to remember this move can happen because we have a fight. So it'll sit here for a while, and if you see a violent candle come down, then come back up and close. Oh, let me do that right. I don't know why that thing did that. So it comes right here, and we have, it's sitting on this structural low, and you get a wick, not even a candle close, a wick, and then the wick closes like that, like how this was. Or I'm going to show you another one. If you get that wick right here, that was the last bit of the yen trying to fill those orders in on this demand, and they failed. So the next move is going to be, just in anticipation of I'm gonna attempt to make a candle. The next move we'll be looking for off of this area. See my nasty look. The next move we're anticipating is this big move like this, because obviously GBP won. GBP had orders and they filled and they were stronger than yen, so it was pushed off the structural low. Now this is just the structural high and structural low. You always definitely, you still have your support and resistances, and they could be found in the middle. These are all just the middle stuff, the support and resistance. So it's like a little game you're playing with yourself. You got something right here, I see. So once you start identifying support and resistance, and it's sitting here and it's going and bouncing back and forth, but then it gets to these highs or these lows. See, it didn't matter what happened right here. This blew past this area, but it got stopped right here. So see how strong the structural high and structural low can be, where the next time it comes down here and does this, it could blow past all your support and resistances because GBP's bank won the fight. Or we can get, this happens too, because it happened last week, where you get it sits there and then it breaks violently down there, then retests and violently pushes back down there. Now you have all that order filled for the yen to push the prices with GBP down. Right. Yeah, so they're like super support and resistance. That's why we call it the structural high, the structural low. It's the structure of this market that you're looking at. A really good one that I saw was on where is it? Was it? I think it was German 30. Did it come up? Oh, German 30. Now check this one out. This is Germ 30. or the DAX index. It's not the one I had in. It was another one. Or no, you know what? I'm tripping. It was gold. I was looking at gold. All right, so here's gold on the monthly. This is the previous structural high before all this happened, right? So it blew past the structural high and it's sitting here. It's sitting on top of the structural high. So we might, just by looking at the fact that this was the structural high, and then, here's the structural low. So here's the supply and demand right here. Clear as day. And then all the in-between crap that we worry about. But it's sitting above the structural high. It looked like it broke it, and it's looked like it's retesting. But we got to do more homework than that. It's trending down. Let me make this a different color because I don't like it with that color. Yeah, let's do like that. So it's trending down though. So when it comes to gold on this supply zone, we only got two choices. Either it's gonna keep trending down, break, retest, and come down, and because it's got to come down and fill in new orders on this demand, or it'll just break out of this trend that it's in, break it like violently break out of it. It's gonna violently break out of it. I had to make that emphasize that big blue candle, and it might come back and retest, and then start making new structural highs until it makes a new structural high. Then the bank will have their bank orders at their structural high, and then now we got the whole scenario all over again. And then now we're trading the in between crap, all the support and resistances in between. So yeah, you're correct. Supply and demand is like having a super support and resistance because it don't break too easily. It's hard to break. It'll just be bouncing off this thing forever. Yeah. Matter of fact, now that you said something about super support, GBP Chef is had one. I like you said. I like the super support resistance. I like that. So here's the month. I think it was on the day though. No, that's weekly. Let's take all this off. Look at this consolidation. So what we had here was we had the structural high of this area, and we had a structural low that was right there at that moment. It kept bouncing, but it never really made it back up to fill in the orders. So it was like it went from there to trend down, and look what happened now. So it came back to that demand zone, but broke it, retested, and it's gone. The next demand zones are down here. The next structural low will be down here, and then you got that. Yeah. So this is I mean we could technically we could get some buys off of this because if we go to a lower time frame, this is a support and resistance in itself. That's why it's got a red candle. But and then this is the pullback area right here where it made a base to even rally back up there. But see, what's going to end up happening is we'll get caught putting in buys knowing that the market is trending, and we'll have this cycle of doing, not taking the road of least resistance. So this candle's going to come down to test this base again, but it might just floor past it, retest this, and just keep going down until it gets to this demand zone. Like you can clearly see with your eyeballs, this is not a buy. This is probably going to continue down. Yeah, it'd be a very big bag if we got in right now. Like literally, I mean, if I did some more analysis and we just got in right here and took it down there, oh my God. First of all, it's daily. It'll probably take it to next year for this move to happen. But yeah, as a trader, we always want to keep in mind when the market is dropping violently. Oh, go ahead. Go ahead, do what you got to do. I'm gonna end this video with that. I'm gonna have it on the website so you can see it. Oh, no problem, man. Peace. Peace.